And beginning the broadcast, we got to start off with the news from the USDA earlier this week. Several major reports came out on Tuesday. Big reductions for corn as the 2020 national corn yield was reduced by 3.8 bushels per acre. You'd have to go back more than 30 years to find a larger drop. In soybeans, the USDA only trimmed the crop by half a bushel per acre, but a tight stocks-to-use ratio continues to contribute to higher commodity prices. Darin Newsom of Darin Newsom Analysis joined me on Wednesday to make sense of the numbers.
I think USDA is making an attempt right now to get back in line with what the corn situation has been for the last 4 years. Because what we've seen is 4 consecutive years, the previous 4 marketing years, of USDA overestimating corn stocks. And over the last 3 to 4 months, we have seen dramatic cuts. I think they've taken over 1 billion bushels off the 2021 ending stocks number. It's just been incredible. Some of the cuts make sense. Some of them some of them could be considered questionable. What it really looks like is it's just a move to try to get back in line with what the market's been telling us for the last 4 years. So that's what I found most interesting yesterday. The slice to last year's yield, the 2020 yield, dropping production by 325 million bushels. They even went back and they reduced last year's ending stocks, the September 1 quarterly stocks number, by another 76 million bushels. So taking 400 million bushels at least off of total supplies. The goal is to try to get back in line. Not that it's a leader, but now it's just trying to get back in line with what the market's been telling us the entire time.
And Darin, let's chat about soybeans for a minute. I'd like to know what you see as the big driver for these markets. I've heard analysts say exports. I've heard analysts say weather in South America. I've heard analysts say the lower dollar. What do you think?
All of the above. It's all the above. We've got a weak U.S. dollar that just can't get its footing underneath it. Now, that usually doesn't make any difference in the soybean market, because when we talk about the dollar, it usually China would buy from whoever had soybeans available. So there was 6 months they bought from South America. Then there was 6 months when they would buy from the United States. However, the U.S. got put on the back burner and was no longer an equal partner in the global soybean trade. And so now market factors like the US dollar are more important. And so with the dollar down, we could be starting to gain some attention from that, but the Brazilian real is also weak. So we're not really gaining much there. The biggest thing is the weather. We saw La Nina, I believe it was La Nina, over South America this winter, which is their summer, which is South American summer. We haven't seen any official reductions to South American production, at least not significantly. We haven't seen any real reductions in local, as far as South American or Brazilian private estimates. So now we just have to wait to see what type of crop, what size of crop Brazil actually produces. Because yes, we've seen extraordinary exports over the first quarter, over the first 4 months of the 2020-21 marketing year. Will they continue? I mean, if Brazil brings in this huge crop, ships are going to stop sailing from the United States, and we're going to see this thing collapse very quick as far as export demand come to a crashing halt very quickly.
Let's circle back on corn. What's going to be the acreage story here?
I think it's going to be a fascinating battle this coming, as we finish off winter and as we head into spring and the planting season, who's going to get the most acres. Right now, both new crop corn and new crop soybeans are saying they need more acres next year. Again, soybeans in particular have an inverted forward curve as far as you want to go out and look. So they're saying that they need more acres. They're probably not going to get them, except for in areas where folks have to plant soybeans versus corn. But corn's still going to get its share of the acres. So we're going to see this battle heating up. Then we have to take into account U.S. weather, where we've got some extremely dry situations, particularly along western Iowa, parts of the U.S. Midwest, certainly the Southern Plains. Is this going to change planting decisions? So I think the next month and a half heading into March is going to be fascinating to watch play out. See, as we get deeper into March and then into April, what actually gets planted. My thought is we're going to still see a lot of corn planted.
And we could be seeing some ripples in the livestock market because of corn too, right?
Yeah, I've been hearing some of that from customers already, that they've put a stop on buying feeder cattle at this point because of the high price of feed. So we saw, during Tuesday's action, we saw feeder cattle take a get punched around quite a bit. They lost more than $2. Some of it was possibly tied to the corn market, but we also just see, if we've got enough buyers backing off and saying they're not going to buy feeder cattle, replacement feeders, until they come down a little bit, that puts commercial pressure on the market. And so that's what we've been seeing. It looks like feeders want to go down a little bit more. And at that point, we'll see if we start to find some buying interest. We've also seen placement numbers, as I talked about earlier, going down the last couple of months. If that continues, maybe it's the high price of feed, maybe it's the hot cost of feeders and all of these things combined, then we're not going to have the feed demand. Maybe that starts to put a bottom in, and if corn can start to back off, maybe that starts to put a bottom in the feeder cattle market again.
And Darin, with all that we've talked about today, any other marketing or risk management advice that you'd like to leave us with?
It's tough. Risk management's tough in here. My favorite one in this sort of situation is to just sell into this a little bit at a time. We have no idea how high these things are going to go. We have no idea when they're going to stop and turn around abruptly. So, given that, these are all good prices. So if we want to just feed this market a little bit at a time, for those looking to make bigger sales, we could run stops below previous 4-week lows. But let's take, for example, in corn, that's about $1 lower than where we are right now. In soybeans, that's down almost $2 this week. So, we've got to give the market a lot of room if we're long-term bullish. If we just want to feed it in, certainly a situation where that's not going to be all bad.